Okay, check the answer to homework question. Question 2 and 3 were homework in chapter 6A. Okay, so check. First question number 2, what was given? Eknath, who is 65 years old. 65 years old means, but see, to be called as a senior citizen, along with the age, the status of resident status is also important, means he should be resident. But if the problem is silent, we can assume he is a resident. So you can treat him like a senior citizen. Okay. Can you tell me where is the relevance of senior citizen in the whole topic? In the whole topic, tell me where we have to check senior citizen. Okay, first is 80TTB. 80TTB is a section only for senior citizen. Interest on any account with bank or post office. Okay. Then in 80DDB, treatment of specified disease. If the patient is a senior citizen, then maximum 1 lakh. Whereas there was senior citizen. 80D. In 80D, when you take deduction for mediclaim insurance, there is additional deduction of 25,000 for senior citizen. And if you incur some medical expenditure of uninsured senior citizen, there is a deduction of 50,000. Whether it is own spouse or dependent children or parents. Okay. So these are the places where senior citizen was relevant. Okay. Yeah, that is okay. See, he is reminding of one more point that ATC, there is a scheme called Senior Citizen Saving Scheme. But that we don't have to check in the question. If they write it is Senior Citizen Saving Scheme, then we'll take. But based on the age, we have to use our brain. Okay, he's a senior citizen. So that was relevant in those things which I told earlier. Yes, you can remember like this also. One more point was a Senior Citizen Saving Scheme in ATC. TTB I said. Okay, see paid. Look. So first point in the question, rent from subletting of house property. Subletting is income from other sources. Don't get carried away by the word house property. See, house property income is activated when you give your own house on rent. But subletting means it is your own house given on rent or rented house given on rent. It's a rented house given on for the rent. So it is income from other sources. Okay. And it is fully taxable. Then rent paid to owner. Rent paid. Paid means it is an expenditure. And this expenditure is connected to subletting income. And in income from other source, didn't I teach you whenever any expenditure is connected with the income, you can deduct under section 57. Okay. And see, what is this rent paid to owner, you know, because in subletting what happens, it's a rented house given on rent. And since it is a rented house, I have to pay rent myself. Plus I am receiving rent also. See, whenever rented property is given on further rent, you will receive rent also and you will pay rent also. And whatever rent you received, from that you can minus rent paid. And that is allowed as a deduction under section 57. In income from others, so there was a rule that whenever any income, you find any connected expense, you can minus. Remember 5 points I said: taxable income, deduct the expense; exempt income, ignore the expense; winnings, ignore the expense; dividend, deduct only one expense; family pension, standard deduction. Okay, now see, his doubt is what, you know, can we take this 80GG? See, this is an extra property. Okay. See, this rent paid to owner, this will not come. Okay. See, what was the condition for 80GG? Assessee should not own house. Neither assessee, nor spouse, nor minor children, nor HUF where is a member. They should not own house property, correct? So, do you know he is not owning the house property? Just because he is paying a rent, that doesn't mean he is not owning the house. See, this is rent paid of the sublet house. He might be having his own house. See, this is an extra property. Like for example, take my example. This is a classroom which I have taken on rent. And for example, this classroom remains empty. So I can give it on rent. But that doesn't mean that I don't have my own house. I have my own house. I stay in Malad. I have my own house. See, subletting if you have done, that means definitely it is your extra property. And although you have paid rent, but that rent paid is not of your main house. For your main house, definitely he should be owning his some house. He should be owning some house. Otherwise, in subletting, if you are paying rent, it will not be obviously your main house. Is this the house where he is staying? He might be staying in some house. So do you know any information about that house? So obviously he has one own house. We have to assume that. And see, anyways, this house he is not staying. This is a house which he has taken on rent and given on rent. So this rent paid will not become eligible in 80 GG. Because considering the situation of the son, it is better to assume that he owns some house property. Otherwise, obviously, he will not stay on a road. He should be staying somewhere. And this is not the house where he is staying because this is sublet. So, it is better to assume that he has some house property which he owns. And when you own a house property, you don't get 80 GG. For 80 GG, the condition was you should not receive HRA and you should not own any house property, neither you nor spouse nor minor children nor HUF. So in short, this should not be taken in 80 GG. Just take this whole thing in income from other source and the presentation will be 8,000 per month multiplied by 12. That will come in inner column. That is how much? 96,000. And then less deduction under section 57. 6,000 into 12. But there you have to write a rent paid to owner. Don't just write deduction under section 57. Below that you have to write rent paid to owner. 6,000 into 12. That comes to 72,000. Okay. Then accordingly in the outer column you will get 24,000. Then what about pension? This is income from salary. See, if this is family pension, then income from other source. But this is not family pension. This is a normal pension received after his retirement. Okay. And anyways, he is a senior citizen. Definitely, he might be doing some job in past. So from his past job, he is receiving pension. So it is income from salary fully taxable. But see, this is the only item in income from salary statement. But don't forget standard deduction. You know, because mostly what happens, just because there is only one item in salary, you have the habit of putting directly in the main statement of total income. But then in that course, you will forget standard deduction. See, whether you have one item in the statement of salary or 10 items, standard deduction will always come. And this is, by the way, commuted pension or uncommuted? Uncommuted, because this is received on monthly basis. So it is fully taxable. So it will go to income from salary statement and there don't forget to take standard deduction of 50,000. Then interest on PPF. This is income from other source. Exam under section 1011. Exam under section 1011. So amount column you will put dash. Then interest on fixed deposit with bank. This is income from other source taxable. How do you decide it is taxable? Because it doesn't fit in GPS. Not fitting in GPS means it is fully taxable. Yes, but interest on fixed deposit with bank. Whenever a senior citizen receives interest from bank or post office, it can be any account. You will get 80 TTB. Deduction under section 80 TTB. 80 TTB is for this only. Interest on any account. But it should be with bank and post office. And check here it is bank. In fact, there is one more bank interest. One is fixed deposit, one is savings account. But let it be, for senior citizen, it can be any account. Once it is interest from bank or post office, you will get 80 TTB. But see, that will come later. But first, these two amounts you will have to include in income from other sources. First, these two amounts will be coming in income from other sources. Later on, deduction will come in 80 TTB. Maximum 50,000, right? Then life insurance premium paid for his wife who is suffering from specified disease. 42,000. 42,000 is the amount of life insurance premium. And policy was taken on 1/4/2018. Sum assured 4 lakhs. Now tell me, life insurance premium paid comes where? In ATC, lump enters L. Okay. And if you remember, in lump enters, there are 3 items where payment can be done for 3 people. Assessee, spouse, children. And that was there in life insurance, ULIP and PPF. So this is life insurance. It can be for assessee, spouse or children. And here it is for wife. That means spouse. So it is allowed. But wife is suffering from specified disease. So see, whenever life insurance premium is paid and if the policy holder is handicapped or specified disease, the limit is what? 20, 10, 15. 20% if it is before 1412 and for 12, 13, 10% and on or after 1413, 15%. Remember that table I had given, okay? So here it is 2018, policy is taken on 2018, so it is on or after 1413 and policy on or after 1413, it will be 15% of sum assured. So sum assured is 4 lakhs, 15% of that comes to 60,000. So maximum 60,000 can be taken, but this is maximum. If the actual amount is less, take less. You can make a formula also whichever is less. See, whenever there are limits, you can make a formula whichever is less. So here 42,000 will be taken fully. It falls within the limit. Then subscription to equity linked savings scheme or mutual fund. This will come in ATC. Lump enters ATC. Okay. Then contribution to ULIP. Even this comes in ATC. But this is for his son. It's allowed. In case of life insurance, ULIP and PPF, it can be assessee, spouse, children. So son means children. And the headache of dependent is there only in D sections. Then next point, he spent 2 lakhs on medical treatment of specified disease of his wife. So tell me, this is specified disease, and whenever you spend on the treatment of specified disease, you should be reminded of section 80 DDB. 80 DDB. Okay, and wife, age of the wife is 61 years. What was the rule in 80 DDB? Normally maximum 40,000, and if the patient is a senior citizen, then maximum 1 lakh. But check in 80 DDB, who should be suffering from disease? You know, I told you to check like this, BDR. B means Bimar. Bimar is a Hindi word. Bimar means one who is suffering from disease. So there is disease that we checked. And it should be some dependent's disease. So regarding dependent, problem is silent. So we can assume wife is dependent. Whenever problem is silent about dependent, we have to assume dependent. And BDR, R stands for relative. It should be relative only. And who is relative over here? Spouse, children, parents, brother, sister. So spouse means wife. So all the conditions are satisfied. But you will take maximum 40,000 or 1 lakh? 1 lakh. But what is the actual bill? 2 lakhs. But see, there is recovery from insurance company. Will you net off the recovery first or later on? Later on. First you have to ignore the amount of recovery. See the actual bill amount. Compare this with the limit. 2 lakhs is within limit or beyond limit? Beyond limit. So you can take maximum 1 lakh only. You will take maximum 1 lakh and then you will deduct the recovery amount. So from 1 lakh you will deduct recovery, and what was the recovery amount? 90,000. So 1 lakh minus 90, you will get deduction of 10,000. 10,000 deduction will be allowed. And the wordings will be 80 DDB, treatment of specified disease. In bracket you can show maximum 1 lakh minus 10,000. Sorry, minus 90,000. Recovery from insurance company. And in the main outer column you will write minus 10,000 deduction. Then term deposit with SBI. 4 years term deposit is not allowed. It should be 5 years or more than ATC. So what to do? Ignore it. Just ignore it. See, it is not even an income. See, if there is some income, somewhere or the other we have to fit in the 5 heads. If anything doesn't fit anywhere, so it is income from other source. See, income you have to fit anywhere. But this is not an item of income. See, some student had a doubt, but somewhere we will have to give the effect, sir. It is not necessary. See, we are studying income tax. income item should have effect somewhere or the other. But this is not an income item, right? This is for deduction purpose, but it is not eligible because not 5 years or more. So we will have to ignore it. Then payment of mediclaim insurance premium 30,000 for himself, 32,000 for wife. So D 80D mediclaim insurance. But mediclaim insurance premium should be for whom? Assessee, spouse, dependent children and parents. Your only children has to be dependent. But this is for himself and spouse. So allowed. And in fact in this sum both are senior citizen. Both are senior citizen because his age was given at the first line. 65 years and his wife's age was also given in some point 61 years. So both are senior citizen. That means this amount and this amount both are senior citizen premium. So how to do the working? That whole, tell me the whole format. See, as per our format, what we do? First we write mediclaim insurance premium, central government health scheme, preventive health checkup. Okay, and that also first for own health, spouse and dependent children. And in this question we have got own and spouse. Children's mediclaim is not given and parents data is also not given. So go as per this. So first I will take additional deduction if there is a senior citizen premium. And here both are senior citizen. So what is the combined figure? 30 and 32. It comes to 62,000. But out of 62,000, first you will take 25,000. So first you will take 25,000 here. See, this is some other question I am showing. I just want to show the format. Don't see the amounts written in this format because this is some other sums working. But I want to show this format part. So additional deduction 25,000 will come. And after taking 25, still we are left with some amount. Because we had total 62,000. So from 62,000 you minus 25. There is still 37,000 and that 37,000 you can take it in basic because basic deduction, senior, junior, everyone is allowed. But your maximum 25, so take 25 only. So this is 25, this is 25, total 50,000. Rest all amounts are not there only in the question. So total 50,000 deduction in 80D. Then political party donation in cash, not allowed. Political party, even if a single rupee donated, it's not allowed in cash. But rest all donations up to 2,000 cash is allowed. Then, wait, this I forgot to take, sorry. While discussing 80D, even this was to be seen. Anyways, my answer will not change, but this was to be seen. Paid 8,000 in cash to Hinduja Hospital for complete body checkup. Complete body checkup is a preventive health checkup only. See, don't think that they will always write the word preventive. Body checkup, health checkup, all are called preventive health checkup. Okay. So even this you can count. But in preventive health checkup, you can take maximum 5,000. Whether own, spouse, children, parents, all taken together maximum 5,000. So even this 5,000 you should have counted. So see, when we are doing mediclaim, we had this 30, we had this 32, we had this 8. In fact, we had 3 amounts. Okay. So we had 70,000. Okay. Even this should be counted in 80D. Do you know that or not? Preventive health checkup. Don't expect the word preventive should be there. Complete body checkup is what? Preventive health checkup. So 8,000, 30,000 and 32,000. Total we had 70,000. But anyways, first we take additional deduction. There 25,000 is used. Then 70 minus 25, what remains? 45. But in basic you can take 25 only. So deduction will be 50,000 only. But even this was eligible. This even this should be counted in the working. No, out of 8,000 only 5,000 is eligible. Yes, even my statement was wrong right now. Technically, answer is right, but technically I should have said like this. Out of 8,000, you will scrap 3,000. And we have got only 5,000 as eligible. Okay. So 5,000 is eligible. Then this 30,000. this 32 and this 5. So technically we have got only 67,000 which is eligible. Eligible means which will qualify. 3,000 I should scrap only because it is extra. In preventive health checkup you can take only 5,000. So sometime back I said 8,000, that was technically wrong. Anyways our answer still remains 50,000 80D. But technically speaking, what is the qualifying amount? 5,000 from preventive, 30,000 of his mediclaim, 32,000 his wife's mediclaim. So in all it comes to 67,000. But out of 67,000, first you take 25,000 additional deduction, then balance in basic, but that also you can take 25. And rest all amounts we don't have only in the question. So total will be 50,000. Okay. So 80D will be 50,000, right? Okay, now check the answer. First, income from salary. In income from salary, what you have written? Tell me in detail. Pension 50,000 into 25,000 into 12. That comes to 3 lakhs. Then standard deduction 50,000. So your salary will be 2,50,000. Okay. Then in income from other source, what we had? Tell me in detail. We had rent from subletting. That was in the outer column 24,000. Then we had interest on PPF, that was dash. Interest on FD with bank, that was 28,500. Interest on savings bank account, that was 24,000. That's it. These were the items in income from other source. So total of income from other sources 76,500. Check the answer from here. Okay. So your gross total income will be 326,500. 326,500. Gross total income. Then deduction under chapter 6A. Now tell me, in chapter 6A, what did I tell you about the sequence? You will have to repeat this point. Firstly, always 80 GG and G should be taken at the end. Okay. And at the beginning, you have to first finish those C sections. In that also, first try 80 CCD 1B. Extra 50,000 deduction for NPS. Then 80 CCD 2, employer's contribution to NPS. Then the group of 3 sections, C, triple C, CCD 1. That you should finish first. There is no hard and fast rule, but we prefer to finish that set of C sections first. So here what we had, CCD 1B not there, CCD 2 not there. So we had a group of this 3 sections, C, triple C, CCD 1. See whether all 3 are there or not there. Your heading should be like this only, C, triple C, CCD 1. While giving the heading, always give the heading like this only, C, triple C, CCD 1. But here what is the way of presenting? You'll have to make a list. So tell me what comes in the list of C, triple C, CCD 1. I'll tell you, wait. In the list, first life insurance premium will come 42,000. Then equity linked savings scheme or mutual fund will come 12,000. Then ULIP will come 27,000. What else? That's it. There were only 3 items in the list of C, triple C, CCD 1. So what is the total of the list? 42, 12 and 27. That comes to 81,000. Compare with 1,50,000. Whichever is lower, 81,000. So your answer should be 81,000. Check here. Okay. And once the set of C sections is over, then randomly you can take any. It's better to go in the order of the sum. So in the order of the sum, we have 80D. That I already discussed. 50,000. Then 80 TDB. What have you written against 80 TDB? Interest on any account with banks or post office. And what was the amount? Actually we had amount of how much, you know? 28,500 plus 24,000. So actually we had 52,500. But there is a limit, maximum 50,000. You can take maximum 50,000 only, okay? So in 80 TTB it is 50,000. Getting? Then 80 DDB. 80 DDB I discussed, see here it was there. Some medical treatment of the disease of wife was there. Actual cost was 2 lakhs, but we have to bring it to the limit of 1 lakh. And then recovery from insurance company was 90,000. So net amount is 10,000. Wordings will be treatment of specified disease, bracket wife. Treatment of specified disease, in bracket you can write wife, and also in the bracket you can mention max 1 lakh minus recovery 10,000. Sorry, 90,000. Max 1 lakh minus recovery 90,000. So outer column 10,000. So that's it. These were the deductions. And then net taxable income 1,35,500. 135,500 net taxable income. So this was question number 2. Then question 3. Miss Rania, physically handicapped. Now see, when assessee himself or herself is handicapped, ATU is allowed. So here ATU will be allowed. And have they specified the percentage of disability? Percentage of disability not given, then 75,000. Okay, 75,000. Otherwise for severely disabled it is 1,25,000. Here you will take 75,000 only. She is employed with Tata Motors. And then compute the total income. Did you notice in these questions what they ask? Compute the total income or net taxable income. So basic salary 30,000 per month into 12. This will go in income from salary 3,60,000. What about profession tax paid by employer? Paid by employer means it becomes a benefit. So first you will take it at the top of the statement, then at the bottom of the statement. Okay. So it will come up also and down also. Okay. Yes. So first in the statement you will write profession tax paid by employer how much? 2,500, and later on you will also take deduction of profession tax 2,500. Then commission on sales 2%. Turnover achieved by her is 20 lakhs. Turnover means sales only. So 20 lakhs on that 2%, that comes to 40,000. This is called turnover commission. Fully taxable. Many times you heard about this in the formula, but for the first time it has come in the sum. Up till now we have been talking about turnover commission, but just for the sake of the formula, but for the first time it has come in the question. Anyways, nothing special, just include this in the income from salary, fully taxable. Okay, then contribution to pension scheme of central government. See, whenever central government pension scheme comes means NPS, and your headache should start. Headache means you have to be careful. There are 3 sections. CCD 1B, CCD 1, CCD 2. But CCD 2 is for employers, and for your own CCD 1B and 1. So check. This is what employers or own? Own. This is own contribution. And her employer's contribution is given later on. Okay. Let's do one thing. First finish this employer's contribution. This is simple. Employer's contribution to NPS, first include in salary, full amount. Then deduct how much? 10% of basic plus DA in terms. Here we don't take turnover commission, right? It's basic and DA in terms. Okay. So first I am discussing the effect of employer's contribution. So it is 5,000 into 12, how much? 60,000. So first you will include in income from salary, and then deduction will be either 10 or 14% depending on government or non-government. She is not government employee, she works in Tata Motors. So not a government employee, so 10% of basic plus DA in terms. And here only basic salary is there, 3,60,000. 10% of that comes to 36,000. So in the salary you will include full 60,000. And in 80 CCD 2, 36,000. But this was employer's contribution to NPS. What about her own contribution? First take 50,000 in 80 CCD 1B. How much it is? 6,000 multiplied by 12. So it is 72,000. So from this 50,000 I will use in CCD 1B. Okay. What will be the wordings? Additional deduction for contribution to NPS. See, for 80 CCD 1B you should always write additional deduction for contribution to NPS. But after that 50,000 used, What is remaining? Now this 22,000 will come in the group of C, triple C, CCD1. Those three sections are like group C, triple C, CCD1. So in that group, how much will go? 22. But even this should be subject to a limit. If salaried, then 10% of basic plus DA in terms. If not a salaried person, 20% of GTI. She is a salaried person. So 10% of basic plus DA in terms, which is 36,000. And our amount is within limit. And if our amount is within limit, take lower amount only. So finally see, in 80 CCD 1B, 50,000 will go and remaining 22,000 will be covered in the list of C, triple C, CCD 1. C, triple C, CCD 1. That remaining 22,000. Done? Then dividend from foreign company. Dividend income is income from other sources. Then interest on money borrowed to invest in foreign company 14,500. Bank charges for collection of dividend. See, they have given expenditure related to dividend. One is interest on money borrowed, other is bank charges. But remember the rule in income from other source, related to dividend only one deduction is allowed. Interest on loan to invest in shares. And that to maximum 20% of dividend income. So see, firstly bank charges I will put a cross mark, it's not allowed. I will consider only interest on money borrowed. And here also maximum how much? 20% of your dividend income, which is how much? 12,000. But our actual expense is how much? 14,500. So you cannot take 14,500, you will take 12,000. You can do whichever is less also. You can show also in the solution whichever is less. 20% of dividend income or actual interest on loan, whichever is less. Limit means whichever is less only. So it will be 12,000. So inner column 60,000 minus 12,000, outer column 48,000. See, all the homework I am giving thoughtfully here. At what time to give the homework, that is also planning. And if you respectfully do these sums, you will be benefited. Then what about interest on savings bank account? This is income from other sources. Okay, and income from other source taxable because it is not from GPS. See, this is not POSBA. They have not written post office. It is a savings account with the bank. So it will come in income from other source taxable. But for savings account interest, we have 80 TTA. See, TTB should be reminded when you are a senior citizen. Here, Rania is Miss Rania, Miss, not even married. And anyways, whenever age is not given, all are young, junior. So for junior people, it is TTA, maximum 10,000. So here it is only 9,000. So include 9, minus also 9. You include only 9, so minus also 9. If it would have been 19,000, then 10,000 you can minus. Then life insurance premium paid for a father. Father's life insurance premium not allowed. How did I know? You should revise. In lump and TERS, in LIC premium, ULIP and PPF, 3 people are allowed. Assessee, spouse and children. So in life insurance, it can be yourself, spouse or children. But this is life insurance premium of father, which is not eligible. So entire information is completely useless. Just ignore it. Then purchase of National Savings Certificate ATC. Okay, then spent National Savings Certificate ATC. Then she spent 21,500 on the treatment of her disability. This is whose disability? Or see, when you yourself are handicapped, you get deduction for free. You don't even have to spend. See, if your family members are handicapped, then you spend something, then even if you spend 500, you get flat deduction of 75,000 or 1,25,000. But when your family member are handicapped, then you have to spend. Deduction is not for free, you have to spend. But when you yourself are handicapped, looking at you only, anyone will get the sympathy. So you don't have to show that I have to spend and all. That spending is not required. So this information is useless. In fact, we have to explain, Rania, don't show that you have spent this much. Even if you have not spent, you will get ATU because you are handicapped. I am talking to Rania. That Rania, no need to spend this. See, if you spend, it's good. It is for your treatment, but this spending is not required for ATU. If you don't remember, I told you in ATU, deduction is for free. You don't have to spend even a single rupee. It is based on the sympathy that someone is handicapped. You know, my dialogues were that a handicapped person has to take lot of pain to earn 5 heads of income. So considering that, we give him flat deduction, whether you spend something or you don't spend. Yes? Yes, if it is 80 DD, then spending is must. But this is not reminding you 80 DD, right? 80 DD is for what? Not your own disability. 80 DD is spending on the treatment of whom? Your relative, HDR, handicap dependent relative. See, when you spend on your relative, then spending is must, then 80 DD. So see, whenever it is about disability, always check who is disabled. If yourself are disabled, then 80 you, irrespective whether you spend something or not. And if family member handicapped, then spending is must. Then whether you spend 1 rupee or 1 crore, standard flat deduction of 75,000 or 1,25,000.
If this 9 point was not given, then too we will give it.
That's what I was talking to Rania. Rania, even if you don't spend this 21,500, you will get deduction. See, this point was not needed for ATU. We made up our mind in the first line itself. See, the moment I read Rania is handicapped, that's it. Did I check? Is she spending something or not? Once a person is handicapped, you should immediately start feeling sympathy for that person. Then it will be so rude to say, spend something, then we will give deduction under ATU. She is handicapped. Keep complete silence and give deduction. Spending is not required. So this data was given for confusion. You can write somewhere on the top, for ATU deduction, spending is not required. For ATU deduction, spending is not required. For ATU deduction, spending is not required. Yes, in 80 DD, everywhere spending is required. Everywhere. No deduction is for free. Yes. For ATU, spending is not required means what? Don't spend. Still you will get deduction. Whether you spend, you don't spend, you will get flat deduction of 75,000. And if severely disabled, then 1,25,000. Okay. So this was for confusion. That's why I said don't go as per some, go as per system. System means our theory. Our theory should be so thorough and so minutely read that you should not be affected by their confusions. Tell me, what if this was, look at this. She spent 21,500 on the treatment of instead of her disability, it was disability of her husband. Disability of her husband. So if Rania is spending on the disability of her husband, so see, because Rania herself is handicapped ATU, plus she is so careful for her husband is also handicapped, and it is very common combination. Sometimes your husband is also handicapped. So tell me now, if we spend something for her husband's treatment, then ATDD. But the condition is HDR, handicap. Yes, they have written disability. Dependent we can assume. Problem is silent about dependent, always assume dependent. And husband falls in relative, spouse. Then ATDD would come. And their spending is must, but we don't see how much is actually spent. Flat 75,000. But this, if this change was there, in our question she has spent on herself only, which was not needed. Without even spending, she can get ATU. Clear? Yes. See, in the change which I did right now, that if she would have spent this amount on her husband's disability, then we will get two deduction. ATU 75,000 for yourself being handicapped. Then ATDD for treatment of handicapped husband. That also 75,000. And it is possible. And see, you cannot say why double 75. There are double handicapped also. She is handicapped, so we have sympathy for her. So 75,000. And she is spending on the handicapped husband. So for that again 75,000. So you will get 75,000 twice. But the section will be different. For your own handicap ATU and for husband's handicap ATDD.
Our husband is not disabled properly mentioned. Handicap नहीं है इसको.
Then
तो उस केस में 21,500 का क्या ट्रीटमेंट करेंगे? लेकिन डिग्री में तो कवर नहीं होगा.
Then it will be ignored. His doubt is what? She spent on her husband's treatment and husband is not handicapped. Then why will you get? See, treatment deduction you get when either someone is handicapped or disease or uninsured senior citizen. Now he has touched that point, so by heart this now. By heart this. When will you get deduction for medical treatments? Either you treat handicap, then ATDD, or you treat specified disease, then DDB. Or in ATD also, if you remember, medical treatment of uninsured senior citizen. Okay. Anyway, this is just a general discussion. Our main point which was going on was this, that this they had given, but our answer is there was no need to spend for your own disability. You spend, it's your wish, but for ATU there is no condition that you spend, then only you get ATU. ATU is given whether you spend or you don't spend. Flat 75,000. Then she invested 70,000 in term deposit to the bank for 7 years. Yeah, this is 5 years or more, so ATC. Then payment of Mediclaim insurance premium. Mediclaim is ATD. 18,000 for herself and 85,000 on medical expenditure of her mother, age 52, who is not insured. Uninsured. But see, in ATD you get deduction for medical treatment of uninsured senior citizen. See, here her mother is uninsured, but she is not a senior citizen because her age is only 52 years. If there is uninsured senior citizen, then amount spent on the treatment is qualifying for ATD, but this will not qualify for ATD. So in short, this 85,000 was to be ignored. Yes, only 18,000 is useful in ATD. Okay. Did you understand why I am ignoring 85,000? Because mother is not a senior citizen. And see, I will remind you once again, in our theory the rule was what? Medical expenditure uninsured senior citizen. Okay. So tell me in this question what you'll do. We have got just 118,000. Where will I fit? Will I take in additional deduction? No. Additional will be zero. Additional is only when there is senior citizen. So it will come in basic deduction. And you can take maximum 25,000. Here we have only 18,000. So full 18,000 will be allowed. And that's it, 18,000.
85,000 का अमाउंट है तो वो पेरेंट्स में वो बेसिक में तो आएगा
No, see, look here. His doubt is what this 85,000 should come in parents. See, for parents, when do you get deduction? Check. Either you pay Mediclaim insurance premium, insurance. And our question that mother is uninsured. Okay. So, parents are seen in the question. I understand mother is parent. But then for parents, when do you get deduction? Either when you pay Mediclaim insurance premium, but they are saying mother is uninsured. So how can it be a Mediclaim insurance premium? And Mediclaim insurance, if it is given by spelling, you can make out Mediclaim insurance premium. Or there should be some preventive health checkup for parents. That was also not there. Yes, this was there. Uninsured was there. But mother is not a senior citizen. So it doesn't fit anywhere. So your theory should be so thorough that immediately you should be applied the knowledge. See, in sums what we do, we apply the knowledge. But application becomes simple when your knowledge is thorough. But if your knowledge is weak, then you are not able to apply, you will make silly mistakes. After me teaching you, how do you realize, oh yes, now I understood. So that means your theory is weak. See, if some point is new, I understand. But if the point is not new, I have to struggle to explain, and then you say, okay, yes, now I understood. That means somewhere your theory is little weak. Okay, so you have to strengthen your theory. And all these things, it is useful in CA final also. I have seen, I am getting many comments in YouTube. For what, sir, please upload the video of chapter 6A, please upload the video of chapter 6A. They are constantly requesting. Today I am going to upload one video of inter CA only for my final CA students. Why? Because even in final CA, these sections are useful. So if you make it so thorough right now only, so final CA, at least this topic will be deducted for you. Okay, so anyways, where we were? So in 80D, we will have only 18,000 and that will be allowed as a basic deduction, which is maximum 25. Here it is less, so less. And this will not be allowed. Then donation to IIT for scientific research. But it is in cash. Yes, up to 2,000 cash is allowed. Here it is exact 2,000 only. So cash will be allowed. But wait, research donation comes where? GGA. But for GGA, you should not have business. Check. Is Rania doing any business? No, she is a salaried employee. So not a businessman, we can take GGA. How much? Full 2,000. Then HRA, rent paid in Indore. So HRA will come in income from salary. And once you receive HRA, you don't get 80 GG. So this will come in income from salary. Inner column 84,000. Less exam under section 1013A. How much? 50 or 40% of basic DA turnover commission. Here you will take 50%. No. 50% is for Mumbai, Delhi, Kolkata, Chennai. Here it is Indore. So you will take 40% of basic DA turnover commission. So here 40% is okay. But what about basic? Basic was 3,60,000 in this question. DA in terms not there. Turnover commission was 40,000. So 3,60,000 plus 40, 4,40,000 of that 1,60,000. So in HRA formula, first amount is 1,60,000. Actual amount received 84,000. Rent paid minus 10%. So rent paid is 96,000. Minus 10% thing comes to 40,000. So 96 minus 40, 46,000. Sorry, 56,000. 96 minus 40, 56,000. And out of the 3, which is less? 56,000. So minus 56,000. So in HRA, inner column 84 less 56, outer column 28,000. 28,000 HRA taxable. Then next point is running and maintenance expenses including driver's salary of her car reimbursed by employer. Car is partly office, partly private. Oh, whenever car you have to first check, it is fully office, office to residence, fully private or partly. Here it is partly. And in partly there was a big chart. Car owned by employee, car owned by employer. Expense paid by employee, expense paid by employer. Then repeat the same thing. Okay. So your car is owned by employee or employer? Employee. See here it is written. It is her car. So car is owned by employee, and then we have to see expense paid by employee or employer? Employer. See, it is clearly written reimbursed by employer. So here what was the formula? Total amount received from employer minus fixed amount. So total amount received from employer is 86,000 minus fixed amount will be 1800 or 2400. 1800 because the engine capacity is not given, so we assume up to 1600 cc, it will be 1800 per month. Plus driver amount will also be included because employer has given money for driver also. So 1800 plus 900, 2700. But this you will minus 2700 per month into 12. So I repeat, it will be 86,000 minus 30,400. 86,000 minus 30,400. So outer column 53,600. 53,600. See, if you are not able to write the body, you can simply perquisite of car. Perquisite of car or car facility for partly office, partly private. What was the amount? 50?
53,600.
Yes, 53,600 outer column. This is for point number 15. Okay. Now check the answer. Tell me in the statement first. Check in detail. Income from salary, what all we have? Fast. Income from salary, what all we have? Basic salary 3,60,000, commission 40,000. Employer's contribution to NPS 60,000. I hope you have taken that. So I repeat, in salary we have got basic, turnover commission and employer's contribution to NPS, which was 60,000. Plus HRA is also there. Plus that car facility. And profession tax paid by employer also. Sorry, I forgot that. So see how many items we have: basic, profession tax paid by employer, turnover commission, employer's contribution to NPS. This is the fourth item. Fifth one was HRA. And car is sixth one. So total 6 items should be there in the income from salary statement. And the gross salary will be 544. This is gross salary, gross. Less standard deduction 50,000 and profession tax also don't forget 2,500. So after that your final salary amount comes to how much? 491,600 income from salary. Check the answer here. Okay. Then in income from other source, what you have? You have got one dividend. Inner column 60,000 less 12,000. Outer column 48. Interest on savings bank account 9,000. And that's it. Only 2 items were there. So total of income from other source 57,000. Gross total income 548,600. Okay, then in chapter 6, say first we will do the set of C sections. And in set of C section, first take CCD 1B for NPS own contribution. So here NPS was there. And her own contribution was actually 72,000, but in additional deduction we can take 50,000. So the wording should be like this: 80 CCD 1B additional deduction for contribution to NPS, amount column 50,000. Then you will write 80 CCD 2, employer's contribution to NPS. How much? 10% of basic plus DA in terms, that is 36,000. 36,000, okay. Then 80C, triple C, CCD 1, that will go as per the list. One big list, then compare with 1,50,000. So tell me what will come in the list? Firstly, this employees contribution to NPS balance amount. 50,000 you already took in CCD 1B, balance amount was 22,000. So that 22,000. Then what else? Purchase of National Savings Certificate will also come in 80C. See, I am discussing the list of C, triple C, CCD 1. Then term deposit bank is also there. Then done. So only 3 items. In C, triple C, CCD 1 only 3 items. Total of that is what? 1,34,000. Compare with 1,50,000. So it will be 1,34,000 only. See. Check the answer. CCD 1B 50,000. CCD 2 36,000. And the group of C, triple C, CCD 1 1,34,000. Then 80 TTA was there 9,000. Limit is 10, but we had only 9, so minus only 9. ATU, assessee is handicap. See, for ATU, your language should be like this: ATU, handicapped assessee. The wordings also is relevant. Write section ATU, then handicapped assessee. Amount 75,000. Then 80D, Mediclaim. Now see, for Mediclaim, that big working note in exam it is not needed, but I would suggest in your notebook you always prepare that big note of 80D, okay. So as per that it comes to 18,000. Then 80 GGA 2,000. So these were the only chapter 6A items in this sum. So net taxable income 224,600. 224,600. Done. Okay, now continuing further, we were actually doing 80G. Okay, 80G. 80G we had done last lecture, okay?
Yes.
Now I'll do one thing. After 80G's theory, immediately I will have to take up one sum. Wait, my objective is what? Look here. My objective is this working which I had explained in the last lecture. We want to see practically how it works. Okay. So for that one question. And one more reason for doing the question is, you know what? There is one special point related to AGTI. See this AGTI. There is one special point related to AGTI which I didn't explain in the last lecture. I will explain directly in this sum. Okay, so let's start this sum. The question is question number 11. Question number 11. Read. Ready? Compute the net taxable income. Have the habit of underlining this, because whenever chapter 6 say knowledge is required means the question will be on net taxable income. For assessment year 24-25, is this a printing mistake? Is it proper 24-25?
Yes.
Our year is 23-24. But when we say previous year it is 23-24. But when we say assessment year it is 24-25. Okay, compute the net taxable income. Mrs. Roma, age 40 years. That means Mrs. Roma is not a senior citizen who has a gross total income of 15 lakhs, which includes long-term capital gains. You know what is LTCG? Long-term capital gains of 2,50,000. See, they have directly given the gross total income. Otherwise, what we do? We add 5 heads of income. Here they are directly given the gross total income. But out of the gross total income, how much is capital gains? 2 lakh 50. So balance will be some other income. We don't know which income, but let it be. Since they have not given the information, let it be. Then, anyways, the question is mainly dedicated on deduction under chapter 6A. So income is given ready-made. Now read. She provides following information about her investments and payments. Investments and payments mainly attract chapter 6A. Investments and payments usually attract chapter 6A item. Because most of the chapter 6A item there is some payment or investment. Yes, there are some income related deduction. There are some income related. Where it is an income, then chapter 6A. Like 80TTA, 80TTB, it becomes your income, then chapter 6A. But those are exceptional items. But most of the items are payments, investments in chapter 6A. So first point read, life insurance premium paid, policy taken on 31st March 2013, sum assured 4,40,000. Okay, now tell me, life insurance comes in 80C. So first do one thing, write here 80C. Okay, now what is the limit for life insurance premium? For handicapped and specified disease people it is different, but for normal people it is either 20% or 10%. 20% if policies before 1st April 2012. So here it is what? Yes, it is after 2012. So it will be 20% or 10%? 10% of sum assured. So see what is the sum assured? 4,40,000. So into 10%, 44,000. But this is the limit. You can compare with the actual premium take, which is less. What is less? 35,000. So 35,000. Because our 35,000 is within the limit, you can take 35,000. Then what about PPF contribution? Even this will come in 80C. When do you write it in income from other source? If it is interest earned from PPF account. But here we have contributed in PPF, 80C. Then principal repayment of housing loan to SBI. You know housing loan principal repayment, where does it come? In lump and terms are repayment of housing loan. But loan should be taken from banks and financial institution. Here it is taken from SBI. So it is eligible. Write there 80C. Then what about LIC pension fund? See, pension fund is pension scheme. But always watch for it is whose pension scheme. If it is central government, then the rule will be different, NPS. But this is LIC, insurance company. So 80CCC. So here it will be 80CCC. Then Mediclaim policy taken for self, spouse, dependent children. All are eligible. Premium paid by check. So this will come in 80D. Then one more point is there. Mediclaim insurance premium paid by check for parents. They are given for parents separately. Even in the answer also, we take deduction for parents separately. See, the way our answer is, the question also present in the same way. In our answer, what we do, we take for own, spouse, dependent children first, then we take for parents. So even in the question, they have arranged in 2 points only. So you can write here 80D, 80D. I am not discussing the effect right now, because anyways we are going to solve this. That time we will discuss the effect. And note here, parents are senior citizens. Okay, now donations. Donations made during the year. Now look here, look. For donation, I will give you one method. Look here. If you find Prime Minister Drought Relief Fund, write there you 50%. Okay. And if you find anything else from Panik, Zalma, GS, what will you write? you 100%. This code language we will have to use, okay? And then in limited category, if you find family planning or Indian Olympic Association, what you will write? L 100%. And if you find anything from CHMT, which I call it as Chamat, write L 50%, okay? So decide one by one. First is 14,000 to PM Cares Fund. Where was PM Cares Fund in our theory? Tell me. Here. In Prime Minister can't, it was C. PM Cares Fund. So it is U 100%. So do one thing. Write along with me. Firstly, see, this side I will write 80 G. And here I will write U 100%. Do the marking the way I am doing, okay? Then 10,000 to National Fund for Drug Abuse. Where was drug abuse in our theory? See here. Remember there are 8 points with national. National, 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 national. Children, communal, blood, illness, sports and culture, technology, defense, drugs. So here it was drugs. So it is from here only. So it is U 100%. So write here U 100%. Then 8,000 to Indira Gandhi Memorial Trust. Does Indira Gandhi Memorial Trust come here? See, look, let me give you one knowledge. Earlier I am talking about some old law. Look here. Wait. Before 23 budget, there was some donation like, look, Rajiv Gandhi Foundation, Jawaharlal Nehru Memorial Fund, Indira Gandhi Memorial Trust. These donations used to exist, but it is scrapped now. Reason I will tell you. See, this is old batch. This notes which I am showing, our code word is not like this. What is our code word? Panek Zalma GS. But in my old batches, the keyword was Rajiv Panek Zalma GS. So what has changed for you, you know? There was one donation called Rajiv Gandhi Foundation. Then J stands for Jawaharlal Nehru Memorial Fund. Then I for Indira Gandhi Memorial Trust. These donations used to exist. But in budget 23, they have scrapped this donation. What was the logic of Narendra Modi, you know? That we don't want to keep any donation in the name of a person. Rajiv Gandhi, Indira Gandhi. Why? Why to unnecessarily make them popular? It should be Prime Minister, blah, blah, blah. Like, see, all these donations are Prime Minister Care Fund, Prime Minister Army, Prime Minister. See, it should be Prime Minister. But earlier when Congress was ruling, these are all Congress people. They had donation in their own name so that their name becomes memorable. But this idea Narendra Modi did not prefer. Rajiv Gandhi Foundation. Rajiv Gandhi is no more. He is no more a Prime Minister. He was long back. But still his name is going on. And why names of a particular person should prevail? His country is of no single person. It is of everyone. So why Rajiv Gandhi? Why Indira Gandhi? Narendra Modi prefers what you know. It should be Prime Minister blah 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 fund. After Prime Minister you name anything, but the fund should start with Prime Minister. So that's why any donation which were there in the name of a particular person, Rajiv Gandhi, Jawaharlal Nehru, they are all scrapped. But earlier in my old batches I used to say, if you give donation to these people means exactly not to person, they are dead. But if you give donation to fund created by Rajiv Gandhi, fund created by Jawaharlal Nehru, fund created by Indira Gandhi, you used to get deduction earlier. That was only 50%, but that is stopped now. See, this is old rule, but still I am giving you the knowledge. You know why? Because in question they will give you. but you have to ignore it. In my old batches, you know what I did for this? See, what was the point we are doing right now? Yeah. In my old batches, I used to say 50% deduction for Indira Gandhi. Because see, in this is the old notes. And in old notes, Indira Gandhi was here. Can you see Indira Gandhi eye? It was here. But now since these donations are cancelled, we have only these many. So any donation in the name of Rajiv Gandhi, Jawaharlal Nehru, Indira Gandhi, just ignore it. Deduction will not be allowed. But did you understand? Although it is old rule, but still I had to give the knowledge because in the question they will give you. And as a student, you are supposed to remember that these donations do not exist anymore now. So if someone gives donation, deduction will not be allowed. So this I will do one thing, I will just cancel, not allowed. Not allowed. Now see what he is saying. Full amount will become taxable. Why taxable? When do we use the word taxable? When there is some income. Just now only sometime back in the last question I said that just because something is given, that doesn't mean you put anywhere. See, if some income item is there, income, then you have to place somewhere or the other. Either salary, house property, business, capital gains, income from other source. If there is some income, is this income? This is a donation which government doesn't consider, so ignore it. And see, some students say that will it be considered as taxable? Taxable word suits when? If there is some income. Okay, and this is not an income, this is a payment. And you know, first lecture also I told you, if you remember, when there is income, our language is taxable or not taxable, and for payments we say allowed or not allowed. So here the right word will be allowed or not allowed? Not allowed, because this is payment item, donation. So your language should be allowed or not allowed? Not allowed. See, I have written there not allowed. You also write there not allowed. Then this way they can also give Rajiv Gandhi Foundation, Jawaharlal Nehru. Just ignore, not allowed. What about PM Drought Relief Fund? This will be U 50%. U 50%. Then 50,000 to notify temple. Notify temple for repairs and innovation. This comes where in our theory? ATG limited category. In Chamat it is T. T for temples, church, mosque, gurudwara, historical places, repairs and innovation. Even if the word repairs and innovation was not given, we could have assumed. So this is also ATG. But here what I will write? L. Here our code language is L 50%, limited 50. Then 80,000 to approved charitable institution. Charitable institution. This comes in Chamat. In Chamat C. L 50%. L 50%, right? Then 19,000 to local authority for promoting family planning. Family planning comes in L 100%. Here, family planning L 100%. Then next is 4,000 to electoral trust. See, political party electoral trust, it comes either in GGB or GGC. GGB is for companies, GGC is for non-companies. Here, who is the assessee? Mrs. Roma. Mrs. Roma is not a company. If the assessee is a company, then GGB. But our assessee is Mrs. Roma, not a company. So GGC. Correct? So write there 80 GGC. Then what about National Laboratory Donation for Research? GGA. But in GGA, be careful, assessee should not carry on business. Because those carrying on business get deduction under the head income from business only. So is Roma carrying on business? Nothing is going to see. They have directly given the gross total income. So we can assume she is not having business income. See, they have given gross total income. Gross total income means it includes all incomes. She might have business income, but since the problem is silent, we assume she doesn't have any business income. And accordingly, we can take this in GGA. GGA. See, this is basically a donation special question. In exam, they will not give so many donations, see. But I have purposely given so that we can have a good practice with donation deductions. Start. What is our answer called? Statement of total income. Statement of total income. Statement of total income. Okay, what is the format? First we write all 5 heads of income. But here they have not given the details of 5 heads. They have directly given, look, gross total income. But we have some detail that in her gross total income there is some long-term gain of. See, long-term capital gain is an item of capital gains head. What is long-term and all we will study in the chapter capital gains. Right now you have to just write. So see how I am writing, look here. This way you can present. See, we have to show the best possible breakup. Best would have been if you can write income from salary, house, property, business, capital gains, income from other source. But that much data is not given in the question. So this is the best we can do. Write long-term capital gains, 2,50,000 which was given separately. How did I get this 12,50,000? That was balancing figure. Because in the question C, 15 lakhs was including 2,50,000. So 15 lakhs is including. So if you remove long-term capital gain, you will get the other income. Then after gross total income, less deduction under chapter 6A. Write properly, write the full form. I am using short forms, but you write full form. Less deduction under chapter 6A. Yeah, this is directly outer column. See, I have got less space in the iPad. See, this part I have solved something else, okay. So I have just prepared one column. So if you have prepared inner column, outer column, so this will go directly in the outer column. Directly in the outer column, long-term gain, directly outer column, other income, then directly outer column, gross total income. Okay, now in deduction under chapter 6A, what sequence you will follow? First, you should finish the set of C sections. In that also first priority CCD 1B. Don't go as per some, go as per our system. CCD 1B. For that you should have contribution to NPS. Do we have that in the question? That is not given, so CCD 1B not there. Then CCD 2, employer should contribute to NPS. Even that is not there. Then C, triple C, CCD 1. These three sections you will do together. You will make a list. Total the list, compare it 1,50,000. So do you have anything from C, triple C, CCD 1? C, triple C, CCD 1 we have. What no? At the end everything was G, 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 G. But at the beginning C, 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 C. 80 C is there, C, 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 so many C's. But how will you write? 80C, triple C, CCD 1. Although CCD 1 is not there, but these three sections group is always named together. C, triple C, CCD 1. Right, like this 80C, triple C, CCD 1. Now you will prepare the list of items and amounts in the inner column. Okay. So tell me what you have in this. Life insurance premium, which we decided to take full 35 because it is within the limit. Then PPF, then prepayment of housing loan, then LIC pension scheme. Write all this. There are in all 4 items. 1, 2, 3, 4. First 4 items of the question. Copy one by one. First you will write life insurance premium. How much it is? 35,000. Keep checking. Then we have PPF contribution 1,50,000. Then we have this principal repayment of housing loan 20,000. Principal repayment of housing loan. Then LIC pension fund. Pension fund, pension scheme, one and the same. So LIC pension fund 1,40,000. So these are the 4 items in the list. Total up now. Total of this is, compare with 1,50,000. So 3,45,000 is the actual amount. Compare with 1,50,000 and then whichever is less. Then see, in the order you always keep 80G and GG at the end. In this question we have G. That will keep it at the end. Now rest all section we can take in the order. So in our order, see, all this is over. We are left with now 80D here first. So for 80D, that working note. But see, if you want to avoid working note, see here which amounts are given. Look, 30,000 is for self, spouse and children. Do mental working. You remember the format mentally? Additional deduction if senior. So is there anyone senior from self, spouse and children? How do you know? Nothing is given means no one is senior. Anyways, age of Roma is given. She is 40 years. So obviously, husband all below 60. So no one is senior citizen here. So here additional deduction will not come. It will be coming in basic deduction. And basic is maximum 25. Here it is 30. So you can take 25. And what about senior citizen? Sorry, what about parents? Parents are senior citizen. So first you will take additional deduction 25. And still you are left with 27,000 because total is 52. So additional deduction 25, basic we have 27 but we can take 25. So see, I have done it directly here. This way you can do directly, but whenever I give you homework, do it in detail. Here in order to save the time, I am not asking you to prepare the detailed format. I hope you understand which format I am talking about. 80D big format. Own spouse, dependent children. In that additional deduction, basic deduction. Then medical expenditure of uninsured senior citizen. Same way for parents also. So this way you can do directly also. Actually for own spouse and dependent children we had 30,000. But we can take only 25. And for parents we had 52,000. But that you can take only 50. Additional 25, basic 25. Done this thing? Then what other sections we have? See, 80G I will take at the end. So what else we can do now? GGC, GGA. Finish that. GGC, GGA. 80G I want to keep it pending till the end. So I will do the last 2 points of the question. GGC, GGA. For GGC, what you will write? Donation for research. Or you can write the same sentence which is given in the question. Okay, anyways, I have written GGA first. That's okay. I have written GGA first in my solution. See here. GGA donation for research. GGC donation to electoral trust. Electoral trust. Okay, now see when all these sections are done and only 80 G's remaining, you can find out the answer. And the answer at this stage is called AGTI. The meaning of AGTI is what? The final answer only except 80G. And now only 80G is pending. So when 80G is pending, the resulting figure is called AGTI, adjusted gross total income, right? Like this. Our gross total income was 15 lakhs. From that, 1,50,000 C, triple C, CCD1, 75,000 was 80D, 24,000 80 GGA, 4,000 GGC, all deductions you have to minus, except 80G. No, 80G you have to keep completely pending. unlimited, limited category, whole ATG you have to keep pending. Because adjusted gross total income means after all deduction except ATG. See, her doubt was what can we deduct unlimited donations first? No. AGTI means complete ATG should be kept pending. Unlimited, limited category, everything should be kept pending. And then the answer at that stage is called AGTI. Okay, now see, watch carefully how is the presentation done. After this, see, first you will write section ATG donation. Then look, my plan is like this. I will make two categories. Look at the screen. Unlimited. And here you know what I will do? No working note. Look. One by one I will write the name of all donations. But then see here. Understand the plan first. For limited category I will write limited, but I will go to working note. Like this. So unlimited, no need of working note. Just write unlimited and keep writing all the donations from Panek, Zalma, GS. And then when you come to limited category, you will have to prepare a working note, which I had explained yesterday. So see, write like this. Section ATG, donations. Further divided in two parts, unlimited, limited, unlimited, limited. Okay, now tell me in unlimited donations what all we have. See here, I repeat, there is no format. You will write whatever is given in the question in this list. So search in the question U categories, U category, U50, U100. So look here, we have 1, 2, 3 items in U category. U means what? Unlimited. See this U100, U100, U50. This way 3 donations are there. But where it is 50%, take 50% only. Where it is 100%, take full amount. So write 3 donations: PM Cares Fund, National Fund for Control of Drug Abuse, Prime Minister Drought Relief Fund. I will show you how I have written. I have got less space. I have written little congested. I have written in small handwriting. See this. PM Cares Fund. In bracket you show your knowledge 100%. Amount 14,000. Whatever was given in the question, I have written the full amount. Then I have just written drugs because I have less space. You can write full name. National Fund for Control of Drug Abuse. Then Prime Minister Drought Relief Fund. But in Drought Relief Fund, see, in the question they have given 12,000. But you won't take 12,000, it is 50%. So 50% of 12,000, it will be 6,000. You will take only 6,000. So this is unlimited category. Then after this give the heading limited category, but for that we will prepare a note, working note. Write this way, limited, in bracket note 1. And that is the last thing. Once that amount comes, our answer is final net taxable income. Okay, now tell me, how will you prepare the working note for this ATG limited category? See, last lecture I had explained this thing. See, I'll remind you. In the last lecture I had given you this format. Stick to this format. So tell me, make a plan. First, what you will do? You will write one by one F, O, C, H, M, T, all the donations given in the question. And while writing this, don't take 50%, 100%. Take full amount. See, I have stressed yesterday only. Full amount. And then total up. Compare with 10% AGTI, which is less. Okay. So start. But be little slow because here one point I have to yet explain. See, I have done this much. You can do it till here. Note 1 ATG limited category. Write everything of FOCHMT. If not there, put nil. First F stands for family planning. Family planning amount was how much? See here, 19,000 for promoting family planning. So that I wrote. O stands for Indian Olympic Association. That was not there. And that they will not give also. That will usually come in the questions of company. Then C for charitable purpose. Donation for charitable purpose. See here it was given charitable institution. But see, it is 50%. Should you take 50% now? Don't take it now. First you have to bring it in the limit. And then later on 50%, etc. Okay. So first write as it is 80,000. Then in FO Chamat, next alphabet is H. Housing Development Authority. But that donation was not there. Minority community, not there. T for temples, church, mosque, gurudwara, historical places. That was there. And that was how much? Temple donation was 50,000. And take full 50,000. Even if it qualifies for 50%, take full right now. You also mention this with pencil. That you have to take full amount. See, when I am stressing so much on a particular point, that means there is something I have seen mistakes of students in the past. Okay, now you will compare this with limit. What is the limit? 10% of AGTI. But now look here. Here the limit is 10% of, pay attention one new point, AGTI, but it is like this, AGTI minus 3 things. This 3 things point I didn't say in my last lecture. Means the limit is actually like this, 10% of AGTI minus 3 things. Means from AGTI you will minus 3 things. What are those 3 things I will tell you? Y2 minus I will tell you, but you will minus 3 things. And then you will calculate 10%. That will be my limit. So see, next is what I will explain from AGTI, which 3 things you have to minus. So see, which 3 things you have to minus, you know. Short-term capital gains under section 111A. There is one capital gain which is called short-term capital gains under section 111A. See, first you tell me what is capital gains. Whenever you sell some asset, the profit which you make is called capital gains. But it is on sale of asset. And you know, capital gains is found more common in stock market. People purchase shares, sell shares. So when you purchase and sell shares, you make profit. And especially when equity shares are sold, the profit which you make, it is taxed at the rate of 15%. And that is called short-term capital gains under section 111A. See, when I say 111A, it is equity shares short-term capital gain. And what is short-term? Look, see, since the chapter is not yet over, I will have to give little more explanation. Firstly, capital gains means what? When you sell the asset. And this thing which I was writing, short-term capital gains under section 111A, this is on sale of equity shares. And when it is called short-term, whenever equity shares are sold within 1 year, the gain is called short-term. If it is sold after 1 year, it is called long-term. 1 year is a fixed rule to decide short-term or long-term for equity shares. Yes, other than equity share like gold, silver, land, etc., there we decide by 3 years, sometimes 2 years. Means there is a period to decide short-term, long-term. For equity shares, it is 1 year. See, right now I am not expecting you to understand too much in depth. We are going to study capital gains at length. Right now, I just want to give you some rough idea. Our focus is to understand that from AGTI, what you have to minus and why. That's it. So, right now, don't expect a detailed explanation. Just remember a rough idea that whenever you sell something in 3 years, 2 years or 1 year, it will become short term. Now, sometimes it is 3 years, sometimes it is 2 years, sometimes it is 1 year. For shares, it is 1 year. Item like share, if you sell within 1 year, short term. After 1 year, long term. So answer, today if I buy some shares of stock market and I buy today and I sell it after 2 months only, it's a short term gain. But if I sell after 1 full year, then it will be long term. Okay. But 1 year rule is for shares. But for some assets it is 2 years. For some assets it is 3 years. But now for which asset it is 2 years, for which asset it is 3 years, it is the wrong time to explain now. If I start explaining all that, we will get diverted from the main objective. Okay. So just have some rough idea that in capital gains, there are 2 categories, short term and long term. And to decide short term, long term, sometimes we decide by 1 year, sometimes 2 years, sometimes 3 years. Okay. Now see, what I was saying, from AGTI, you have to minus 3 things. So see, first thing is short-term capital gains under section 111A. This is when you sell equity shares. It is called 111A. See, right now it is new, you are finding little awkward. But when we do capital gains, looking at 111A, you will say, yes, it is equity shares capital gains. It will be so common that time. Suddenly in this topic, if I start talking capital gains, you will also feel shocked. But accept this. 111A means equity shares capital gains and short term. And it becomes short term when you sell equity shares within 1 year only. Okay. Then there is something called long term capital gains under section 112A. This is again equity shares but long term. See, for short term the section is 111A and for long term the section is 112A, but both pertain to equity shares. See, capital gain is not necessary, it comes from equity shares only. You can also make capital gains by selling your gold, jewelry, land. Anything can be sold in capital gains. But right now, what I am explaining, which 3 items you should minus? Equity shares short term, equity shares long term, and all other long terms. All other means other than equity shares also. In short, long term you have to always minus, short term only of equity shares. So see, precisely these are the 3 items. Look. Read what I written. Short term capital gains under section 111A. What do you mean? Equity shares are sold within 1 year and you made profit. So that is called 111A. And then long term capital gains under 112A, even this pertain to equity shares only. But sold after 1 year. That's why long term. And this others means other than shares. Because see, here I said in 1128 is equity shares. Now, other than equity shares, it can be like bonds, land, house. There are many gold, jewelry, silver, etc. Anything you sell, if it is a long-term gain, it is called others. And these items we should deduct from AGTI. Reason is what you know, because these are three incomes subject to special tax rates. These are subject to special tax rates. Now see, again this you will find little tough right now because I have not given you knowledge of tax rates. But soon in the next chapter, I will explain various tax rates, and that time you will realize that normal tax rates is something else only. But these incomes are subject to special rates. And see, what is the special rate? 15% tax is levied if someone makes short-term capital gains by selling equity shares. Feel and understand. Imagine today I buy some equity shares or Reliance and I sell it within 1 year only. I purchased for 100, sold for 120. So I made a profit of 20 rupees. On that I have to pay 15% tax. 15% of my profit. And you know 15% is a concessional rate. These three incomes enjoy concessional rate of tax. But why they enjoy concessional rate, why special rate, this much details I will not give in this chapter. Because we are going to talk about all this at length in the chapter capital gains. Right now we just have a rough idea that these three incomes, which three incomes? Short term capital gain under 111A, long term under 112A, other long term, these are subject to special and concessional tax rate. You know, normal tax rate can go to 30% also. What are the normal rates? I will explain soon. But just remember roughly right now, a normal tax rate can go up till 30%. But see these incomes, this is subject to only 15% tax. And what? If you make long-term gain by selling equity shares, imagine I buy equity shares and I sell after 1 year. After 1 year it will become long-term. I just have to pay 10% tax. These are the very low rates. And all other long-term, like when I sell gold, jewelry, etc., land, houses, then it is taxed at 20%. So see, what government says, you know, from your AGTI, please remove the income which are special tax rate income. Basically, government wants to compute the limit based on your regular income. See, what are we doing in this 10%? Last lecture, what did I explain? That what is the limit? 10% of AGTI. But what is the thinking of government? 10% we want to calculate on your regular income. In this regular income, please exclude all special rates income, which are subject to special rates. And there are three special rates income. Short term under 111A. See, why special rate? Please don't think right now. Because if I go into the depth of that, I will have to open up the full capital gains chapter. But soon in capital gains, I will explain the logic also. That why special and low rates for that short term, long term, blah, blah, blah. Okay. Right now you just remember like this. Oh, government wants to calculate the limit on the basis of our regular income. They want to exclude income subject to special tax rate. Because what government says, all special tax rates income are already low rate incomes. Remove that. Yes, your regular income, which is taxed at high rates, from that you can get deduction. Idea is what? See, this is limit for what? Deduction. And deduction and need for income which is taxed at high rates. Deduction and need for income which is taxed at high rates. And high rates income are other incomes. Not these three incomes. Which three? Short term under 111A, long term under 112A, other long term. These are already subject to low rate of tax. And for income which are subject to low rate of tax, why you want deduction? You are already getting tax at a low rate. So remove those income, remove. And your balance income which is subject to high rate of tax, that you can consider for deduction, but that also 10%. Come to the main point. Main point is why 10% of full income and why not 10% of full income and why only on regular income? Regular income is understood, the income which is subject to full rates. Sometimes the rates are 30% also. Okay. So only regular incomes 10% you will take, because only regular incomes suffer high tax. And their government says, okay, we understand all your regular incomes might be subject to 30% tax. It is burdensome. Okay, do one thing. 10% of your regular income you can take in deduction. Maximum 10%. But of your regular income. In that, please remove those. Which one? All special, especially concession rates. Income which are subject to concession rate. Remove them. Short term, long term and other long term. So conclusion is today what I taught, that when we calculate 10% of AGTI, will we take full AGTI or you will minus three things? Best is to remember like option. Should you take full AGTI or you will minus three things? Minus three things. Which three things? Short term capital gains under section 111A. Long term capital gains under section 112A. And general long term gain. So check in our question, do we have any of these three things?
Long term capital gain under
Let us start searching in my question. Look. See, the answer is in front of you. See, we have got these incomes. So, do we have short term under 111A? Yes or no? No, forget it. Do we have long term under 112A? No. See, this is just LTCG. Just LTCG means general long term. Maybe you have sold land, gold, jewelry. 112A means equity shares long term. That is not there. Okay. Then third one is other long term you have. Yes, we have. So we have this. So minus this thing. Then take 10%. So in short, formula is 10% of AGTI minus three things. By head like this only, 10% AGTI minus three things. But in that three things, in our question, I have got only one thing, which is this 2,50,000. So see, first tell me what was the AGTI in our question?
12,47,000.
This you have also calculated, right? 12,47,000 is AGTI. And then see what I have done. See this working, see. From 1247, I want to deduct this, but this is there or nil? Nil. I also want to deduct this, but this is there or nil? Nil. Then I want to deduct other long term gains, but this was there, so deduct it. See this, right now you don't worry about this 15%, 10. These rates you will remember. I just wanted to convey right now what you know. These incomes have a special concessional rate. They are subject to very low rate of tax. Obviously, you should be inquisitive to know why low rates, sir. I will explain all that in capital gains. Okay. So tell me then, from 12,47,000, you minus nil, nil and 2,50,000. What do you get?
99,799.
No, tell me this AGTI minus three things, how much you get? 9 lakhs. 9 lakhs.
97,000.
Then you will calculate 10% of this.
99,700.
99,700. So see, you have already written in your notebook this much. So see how will I continue further. See, you can write like this also. Wait. Let me make some little change. copy this. See, basically what I written here, 10% off, then bracket. 10% off, then bracket. In bracket, what I written? AGTI minus 3 items. You can write that short form. Minus STCG under section 111A. After some time, this 111A, 112A will become very popular in your mind. Right now, only make it popular. What is 111A? Short-term gains by selling equity shares. And in equity shares, it becomes short-term when you sell within 1 year only. And on equity shares short-term, the tax rate is 15%, which is a low rate of tax. Why low? Logic will be explained later. Then what is LTCG under 112A? This is equity shares only but long term. Equity shares sold after 1 year. Because it is long, the section has also become little bigger. Instead of 111, it's 112. You can relate. 111 is a smaller number than 112. And 112 bigger number means it's long. And 111 is smaller than 112, so short. And just LTCG means general long term. Now can you tell me how to do? Out of the two, see this arrow means what? Whicher is less. Take whicher is less. 99,700. See, meaning of this is what you know. Actually, you have donated 1 lakh. What? 1,49,000. But government says, sorry, we will count only 99,700. Because in limited category, you can donate up to a limit only. So 99,700. Now, after this, you will have to bifurcate. Tell me, first preference I will give to FO. Family Planning and Olympic Association. Do we have that in the question? See here at the top, I am putting a star here. See, 19,000 is family planning. So that you will split first. And then whatever is the balancing figure, of that I will take 50%. This is the way I taught you last lecture. Remember? You also write like this. FNO first preference. Tell me, what if family planning amount would have been 1 lakh? Then it 99,700 is the eligible amount. If family planning is 1 lakh, 1 lakh will not fit only. So we will take entire 99,700 for family planning. But our amount of 19,000 was small. It got easily fit there. And still there is a balance. That balance is left for Chamat. And now it's time to take 150%. For FO, for FNO, 100%. And for Chamat, 50%. At the beginning, we didn't take 150%. See, we had written all full amounts. Now we have to take 100%, 50%. See, one mistake in the law. Look, one mistake. In 80 GG also there was AGTI. But their government has not said minus these 3 items. See this thing what I did right now, what did I do? From AGTI, I deducted these three items. Three items which are subject to concessional special tax rate, I deducted. So this thing should have been there in 80GG also. But in 80GG, law has not said this. So this is, disparity in the law. In one section they are saying remove the special tax rate incomes. And in other section they are not saying this. So this is not actually logical. The logical it should have been what even in 80GG this point should have been there. But you don't do it, please, huh? How will you do in exam, tell me? If it is 80GG question, 80GG, keep AGTI as it is. Please don't minus this three special item which I said right now. Don't do that in 80GG, which is technically not logical. But we can't change the law, we have to accept the law as it is. So this system of deducting three items is only in 80G. Only in 80G. Don't do in GG. So what was the answer for 80G limited category 59? 350. Substitute this over here. See those three special items, short term, under 111, etc. We are not removing from the main statement, huh? See, in the main statement you have kept long term. Obviously, in my income, long term gain is also my income. It is while calculating the limit, for 10% you will deduct those three items. But in the main statement, all incomes have to be included. Because a student, I remember, he made a mistake that he excluded long term gains in the main statement only. Why to exclude in the main statement? Statement of total income is write all income. Those three incomes also you will write. But when you are calculating 10%, it is 10% of AGTI minus those three things. So what is the final answer? 11 lakhs 57,650. This is the net taxable income. What to do with this amount? On this we have to calculate tax. But in this income there is long term gain also. That will be subject to special rate. Long term capital gain subject to special rate. See, I told you. What were the rates I told you? Long term gain is subject to 20% tax. And equity shares long term 10%. Equity shares short term 15%. But that rate and all knowledge you don't have to show now. If the question says calculate the tax payable, that type of question will come in the next chapter. Huh? Then my answer will go one step ahead. Then my answer will not stop here. See, in real life, the working doesn't stop here. After this 11 lakhs 57,650 what we got, we have to calculate tax. But how to do all that? For that there is a separate topic, a small topic, but that is the next topic. Okay. I'm just preparing yourself that is our next topic. So this sum is done. Then what are the remaining sections? This full set we have done. Health related done. This is also done. This is also fully done now. Okay, now QQB RRB is left and JJAA. So first I'll do JJAA. JJAA, okay. Yesterday I wanted to start, but there was some recording issue. So we could not start 80 JJAA. So we are starting now. Look here. Section 80 JJ, as per this section, if you keep new employees on job, whatever salary you paid to the new employee, 30% of their salary. How much? 30% of the salary paid to the new staff will be allowed as deduction under 80 JJAA. And this deduction will be allowed for continuous 3 years. Means you appoint this staff only once, but you enjoy the benefit for 3 years. Like for example, I appoint 10 employees during the year. So 10 employees are my new employees. So whatever new employees have come to me, I will have to see their salary. 30% of the salary. 30% is a fixed rule. 30% of the salary of the new staff, I will minus this year, next year and next year. Back to back 3 years. So see the amount of deduction is like this. 30% of salary for 3 consecutive years. What do you mean of consecutive? Back to back 3 years. Okay. Whereas in next year these employees will become old. But that's okay. This year they were new, and once the employees are newly recruited, you will get deduction for continuous 3 years. Whereas they are new only in the first year. Next year they will become old, but it's okay. Once your deduction starts, it will continue for 3 continuous years. And this deduction is over and above the deduction under income from business. You know why suddenly I am going to income from business? Because see, who employs new staff? A businessman. And when a businessman keeps new staff, the salary of staff is recorded in profit and loss account debit side. And that is already netted off in the net profit. And income from business is nothing but net profit only. So actually you are enjoying double deduction. How double deduction? Staff salary. See, I am not taught income from business, but you know accounts. In accounts, what we do in trading profit and loss account, whatever salary we pay to staff, where do we write? Profit and loss account debit side. And after debiting staff salary and other expense, we get the net profit. And this income from business is nothing but net profit only. And net means net after deducting all expense including staff salary. And new staff salary is deducted once again here. I want you to feel it is a double deduction. Why, I will tell you. But feel it is a double deduction. That already in my income from business I am recording the net profit here. And net means it is net of all expense including salary of staff also. And that salary is salary of old staff, new staff, all staff salary. Plus I am getting deduction in 80 JJAA also. That is only for the new staff. But whatever. Did you notice that or not? See, here you are getting deduction of all staff. And here you are getting for new staff. And here you minus full salary in one shot. But here only 30% salary deduction you will get this year. Then next year again 30%. Next year again 30%. The deduction is allowed in 3 different years. 30%, 30%, 30% like that. Okay. But it is a double deduction. And you know why? To encourage more employment in the country. India is suffering from unemployment, and unemployment is the biggest tension for government, and especially unemployment is seen in people who are poor, who are not literate, who are not educated. They suffer from unemployment. But see, although they are not educated, although they are poor, but they also have the right to have employment, but they don't get employment. That's why government is encouraging all the businessmen, that if you appoint new staff, we'll feel happy. Why? Because unemployment is reduced. So if you appoint new staff, we will give you extra deduction under 80 JJAA. And why it is called extra? Already staff salary is deducted in the income from business when you arrive at the net profit. So this is an extra deduction. Why? Because I am helping to reduce in unemployment. But there are some conditions. See, first condition is you have to keep new employee. Don't expect that you will get deduction for your old staff. You say, I have got 1000 employees. So, keep new employee. Keep new employee. So, keeping the new employee during the current year is must. So, that is first condition. Keep new employees. You will not get deduction for the old staff. Then, the salary of the new employee should be less than or equal to 25,000. Because see, if employee's salary is big, Say for example, I keep employees of 1 lakh salary. 1 lakh salary per month. That means if the employee's salary I have kept as 1 lakh, that means what? He is educated employee. Otherwise, if uneducated employee is there, I will not give 1 lakh salary per month. So when you give 1 lakh salary, that means the staff is educated. And when the staff is educated, they don't face unemployment. Who suffers from unemployment? People who are not educated. Okay. See, you only analyze in the whole country's population, educated people, they will get employment. One day or the other, they will get the job. Who keeps crying that I am jobless, I am jobless, I am jobless, who are unemployed? Sorry. Who are uneducated. Uneducated people suffer. And uneducated people, if I keep it in my job, in my office, I will not pay them salary of more than 25. So indirectly what government says? By making a rule that salary should be less than or equal to 25 means you have to keep uneducated people. Because educated people are educated. They will automatically get the job someday or the other. We are worried about uneducated people. And if you keep uneducated people, we understand they will not have a big salary. So their salary should be 25,000 or less. Okay. In short, the logic is keep low paid employees. High paid employees, if you are keeping, you need it. You are not doing any great work for the country. You need big employees. That's why you are spending on them. We will be grateful when if you keep employees of low grade because they suffer from unemployment. And low grade means 25,000 or less. Then employees should be employed for minimum 240 days in a current year. Now what is the logic of this? In a year there are 365 days. And for our exam in a year there are 366 days. Why? Because our year is 1st April 23 to 31st March 24. In this there is Feb 24. And Feb 24 had 29 days. So our year is of 366 days. So out of 366 days, you have to employ them for minimum 240 days. What is the logic of this condition? See, one by one I am telling you the condition and I want you to know the logic also. Logic of 25,000 I gave. Because 25,000 less means you are employing uneducated people and they need more employment because they will not get job because they are uneducated. So what is the logic of 240 days employment in a year? Because many times a businessman does cheating. You know what he does? Just for the sake of deduction, he will keep the employees on job at the end of the year. Our year ending is March. See, when year ending comes, you get to know this year what will be my profit. You get a rough idea or not?
Yes.
For example, I am doing a business and when March comes, the year is about to get over. So I come to know what will be my profit. And once I realize my profit is going to be too much, so I am worried about my tax. So you know what cheating I can do? To reduce my profit, to reduce my tax, I will keep new staff which actually I wanted to appoint in the next year. But I will appoint them in the current year only, at the end of the year. So that I can get deduction. Means I am appointing when? Say in the month of March only. And see why suddenly I am waking up in the month of March? Because usually when the year ends, you come to know your profit roughly. Anyways, you prepare final accounts when the year is over. But when the year is about to over, say when you are in the month of Feb or March, you get a rough idea. Oh, this year my profit is going to be 50 crores. You love more profit. But now the next tension is you will have to pay tax. The more profit, the more tax. So to reduce the tax, what cheating people can do? They will think, okay, let's do one thing. To reduce the profit, I will take benefit of 80 JJAA. So you know what will go in his mind? The staff which I was planning to recruit in the next year, let me appoint in this year only. So that this year I will get 30% of deduction of their salary. So my profits of this year can be saved. So this type of cheating can be done. That's why government says please don't appoint at the end of the year. And at the same time we are not saying appoint them on the first day of the year only. Appoint at least for 240 days. See, if government says appoint them on the first day of the year, that will be too much. Means first day of the year means 1st April. Now 1st April I should start hunting the employee. Come employees, come join me, come join me. That is not practically possible because it takes time to search the employees. If I want new staff, I will need some time to search new staff. So that's why government is not saying that employ them for 366 days. Why I am saying 366? Our year is a leap year, so it will be 366 days. So government is not saying unrealistically that you appoint for 366, but appoint for 240 days. Means in the beginning of the year, if you try to search employees, by the time you find new employees, you will be able to keep them for a decent 240 days. And if that is the case, then only we will understand that you have genuinely kept a new staff. But just when the year is about to get over, at the end of the year when you keep the staff just for 100 days, 90 days, 50 days, sorry, then you won't get the deduction. But then then in such case you can get the deduction in next year. Current year you won't get. You want the deduction to start from the current year only? Employ them for 240 days or more. But if you keep them on job at the end of the year and they are working just for 5-10 days, so this year your deduction will not start. Actually, businessman was having this idea only that if I keep them at the end of the year, I can show that I have paid them salary, so I can get the deduction here. But government doesn't want to succeed in his plan. That's why government says, see, you have kept new employee, we salute you. We are thankful and we are grateful. But since you are employed at the end of the year, this year not possible. You take deduction next year. We will reward you for the good work. Which good work? Help in reducing the unemployment. We will reward you, but you will get the deduction in next year. This year if you want, appoint them well in advance. Appoint the employee not at the end of the year. Appoint them well in advance so that at least they work for 240 days. This is the logic. See, if you are not worried about the logic, you can buy 240 days. But what is the thinking behind 240 days? You should understand. The thinking is this only. Big companies, what they will do? Once they come to know their profit is going to be too big, the tax will be too high. To reduce the tax, they will do the cheating. They will keep the employee at the end of the year, whereas they were planning to keep them in the next year. But purposely they will appoint in the current year. But government says we are not a fool. Listen to a rule that if you want the deduction in the current year, you cannot get by appointing them in the end of the year. You have to appoint them well in advance so that they work for 240 days or more. Okay, so answer this. Our year is 23-24 and I kept 10 employees, fresh new employees on 1st Feb. So what will happen? I have appointed the employees on 1st of Feb. So count the days. In Feb we have 29 days. Our exam, the year is 23-24. So Feb is of 29 days. And then March 31 days. So total 60 days. Is it 240 days or more? No. So see what will happen. In 23-24, sorry, deduction will not be allowed. But then government will have to give him deduction next year. Because you have to respect one thing, that he has kept 10 employees on job. So there are 10 less unemployed people in India now. So he should get the benefit, but he will not get the benefit in 23-24. See, I have put a cross mark there. But I will get the advantage of full 3 years. But my first year will be 24-25. Then 25-26 and 26-27 and so on. In short, see, even if the number of days is less than 240 days, you don't worry, you will get deduction. but not now. It will start in next year. You want deduction this year only? The year when you appoint the employee, then appoint them for 240 days or more. Okay. But see, there is one exception. If the business is of manufacturing footwear, leather products, apparels. What did I say? If the business is manufacturing of footwear, leather products, apparels means clothes. Okay. If these three items you are manufacturing, then instead of 240 days, it is 150 days. It is 150 days. Why? Because their business is little seasonal. They require staff at a particular season only. Who? People who manufacture footwear, leather products, apparel. In their business, the need of employee comes at a particular time. We don't need them at the beginning of the year. So no point in employing them for the full year. So these people, even if they employ for 150 days in the current year, it is allowed. Means the condition is relaxed for these people because their business is little seasonal. Their requirement of employee depends upon a particular season. That's why for them, instead of 240, it is 150 days. So you should check in the question that who is our assessee. If our assessee is a normal assessee, then go by 240 days. And if our assessee is a manufacturer of footwear, leather products, apparels. Apparel means clothing apparels. Okay. If these three items you are manufacturing, then for you the condition is not 240, it will be 150 days. Next condition, employee should participate in RPF. Means recognized provident fund. See, logic is what you know. See, for example, I have kept you on my job, okay? And I tell you, you work under me, I will give you salary. And then you ask me, sir, what about provident fund? That I will start later. So see, the moment you come to know that all the employees are getting the benefit of provident fund, but your provident fund boss is not starting, that means you are temporary employee. Because only full-time staff will participate in provident fund. And in company, this is a culture. Whenever you are kept in the job in a company for a temporary period, they will not start your provident fund. Starting your provident fund means what? Deducting from your salary, and that much amount they also contribute. This system starts in a company when the employee becomes a permanent full-time staff. So see, indirectly what government says, employee should be one who participate in provident fund. That means they want to keep the employees as permanent staff. Don't keep the employee on temporary basis, because that will not solve the problem of unemployment. Tell me, if I keep 100 people on job and after 5-6 months I have fired them, so what is the use? See, unemployment will be actually solved when they become employed for a longer period. Yes, government is not expecting keep an employee for lifetime, but they should be on your payroll for permanent basis. And when an employee is called permanent employee, once he starts participating in RPF. See, why RPF? Because most of the big companies have got recognized provident fund only. Okay. Unrecognized provident fund is there in very small jobs. Like I can keep unrecognized provident fund. I hardly have 5-6 employees. I can keep unrecognized provident fund. And government is not focusing people like me. Government is focusing big companies where there is RPF. And government says, if you have appointed the employee, start their provident fund also. And if you start their provident fund, we will feel, yes, the employees we have got the permanent job. But if you say, no, provident fund we are not starting now, that means it is fishy. Why you are not starting the provident fund? That means you have kept the employee on a temporary basis. And we don't want that thing. So this was the next condition. Then next condition is, there should be net increase in the number. Means what? Last year I had 100 employees. I removed 10 and 10 new employees were recruited. So what is the net effect? From the 100 employees which I already have, I have removed 10 employees and new 10 employees are joined. So the net effect is what? Minus 10 plus 10, 0. Then you won't get deduction. See, when you keep new employee, we feel happy. But you removed the employees also. So you remove 10 employees, then you recruit 10 employees, the effect is nullified. Yes, we are not saying that you don't remove the employee, remove. But if you are removing 10 employees, keep 12 employees. And then you will get deduction for 2 employees. Didn't understand what I said? You remove 10 employees, then you keep 12 employees. So minus 10 plus 12. So there is 2 new addition. Then you will get deduction only for 2 new employees. So there should be net increase in the number of employees. Net means what? Total number of employees joining minus total number of employees removing, also removed from the job or leaving the job. Whether I have removed or they have left the job, that's not a question. The point is total number joining minus total number leaving. There should be net addition. There should be net increase in the number. Okay. So answer, out of 100 employees, 20 employees left. 20. And I kept 8 new employees. No deduction. 20 left and I kept only 8. No deduction. Okay, now answer. 20 left, I kept 21. Then 1 new employee has come, I will get deduction for 1 new employee. But that 1 new employee's salary is 30%. I will get in this year also, next year also and next year also. And deduction will start immediately this year provided they work for 240 days or more in the current year. Okay. Last condition. Payment should be done by account pay check, draft or ECS. Means whoever you are kept on job, don't make the salary payment in cash. Means government wants to discourage cash payment. Because see, if government comes on inquiry, see all this calculation, in real life we do it. And government wants to check this. And if government wants to check this, whether I have really kept new staff or not, how much salary I have paid them, it can be verified only if it is through check. If I make the payment through cash, how will government come to know that I have made so much salary payment to him or her? So see, these calculation we do, but after we do this calculation, government will do the checking. In fact, see, this calculation which I am teaching, a layman doesn't do, his chartered accountant will do. But whether you do, your chartered accountant does. But this is checked by government. And when government comes for checking, see how government checks, don't worry about that, all that you will study in CA final. But understand one thing, the calculation which I have taught you, this is to be done by public. And public do not know, so they appoint a chartered accountant. But whatever, it is done by us. But whatever calculation we do, government do not believe it. They want to check. So if they want to check, how to verify? If you have made the payment in cash, how government will believe? Because cash I have given to whom? Whether I have given to the new staff or old staff, how government will come to know? Because in cash we cannot track that you have made the payment to whom. And whether you really made the payment to staff or it is some other expense. That's why government is expecting that do the payment by account pay check. And pay means what, the other party. If I am the payer, the other party is payee. Say for example, I make the payment to my staff called Mr. Suresh. Mr. Suresh. So in the account pay check, I will write Mr. Suresh. And government can find out, oh, payment was done to Mr. Suresh. Who is Suresh? He is a new staff. Oh. In short, all this condition is kept by so that government can check. And government does checking. Not so frequently, but rarely they do checking. But first we do calculation on our own and then government does the checking. And when they come for checking, how can they check? Only if you have made the payment through account pay check. See, bearer check also if you have done. In bearer check, government will not come to know this payment was given to whom. See, bearer check can be encashed by anyone. But account pay, If the check is in the name of Mr. Suresh, only Mr. Suresh will get the payment. And now if government comes for inquiry, they can ask me, who is this Suresh? I can prove Suresh is the new staff. So where are his papers? See, this is biodata, he has just joined. So this way we can prove government. In short, this is for checking purpose. That payment should be done by account pay check or draft. See, demand draft is as good as check only. Or what is ECS? Electronic clearing system. Online payment, GPay, credit card, etc. Anything. Any online system is called ECS. Electronic clearing system. Electronic clearing system. So if I make the payment through Paytm to my staff, that is also allowed. Because in my Paytm account, government can see, okay, you have made payment to Suresh. Who is Suresh? He is the new employee. Basically, I have to prove that I have given salary to new staff. Because deduction is allowed only when you have given salary to the new staff. So to prove all this, this condition is required. Are you understand? I am trying to struggle and tell you the logic of each condition. So these are the conditions. That's it. Section is over. So first condition is what? Keep new employee, then only talk. If you are giving to salary to your old staff, then deduction is not allowed. It is only for salary to the new employees. Then their salary should be less than or equal to 25,000. Because people having less salary, that means they are uneducated. And uneducated people suffer more from unemployment. And we want you to help them. If you give salary of 1 lakh, 2 lakhs, that means they are educated people. And educated people are not having unemployment problem. So if you are keeping them, you are not helping the right people. You have to help the right people. And the right people are uneducated. And if they are uneducated, their salary will be less only. Then, in the current year, they should be employed for 240 days or more. And what was the logic for this? Because many times people try to cheat government. Even if they want to keep the employee in the next year, they will appoint in the current year at the end of the year. Because at the end of the year, they are worried. My profits are so high, my tax will be high, let me save the tax. So even if they are wanting the employee in the next year, they will purposely recruit in the current year at the end. But for that, government says, if you do like that, then deduction will not be allowed. You want deduction in this year, don't appoint them at the end of the year, appoint them well in advance. So that at least they work for 240 days in the current year. In case it is less than 240, then also deduction will be allowed. But it will not start from this year. It will start from next year. Okay. And this 240 days is relaxed to 150 days for manufacturer of leather product, footwear and apparels. Okay. Then the new employee should participate in Provident Fund. Because only those who are participating in Provident Fund, they are actually full-time permanent staff. And we want you to keep not the temporary employee. We want you to keep permanent staff. And the sign of permanent staff is they will participate in Provident Fund. And there should be net increase in the number. Means if some employees are leaving, some are joining. So the net effect should be there should be increase in the number. And last condition, payment should be done by account pay check, draft and ECS. Okay. One more point. This deduction is allowed only to tax audit assessees. You know what is tax audit assessee? Look here. Books of accounts are maintained, you know. Books of accounts, when they are checked, it is called audit. In your batch, audit is not yet started. So that's why I have to give you some rough idea. Audit means what? When your books of accounts are being checked. Who checks your books of account? Chartered accountant. You prepare your books on your own. You keep an accountant. But your books will be checked by chartered accountant. Means what chartered accountant will check? Whether the net profit is calculated properly or not. Whether the balance sheet is made properly or not. It is checked by a chartered accountant. And when chartered accountant does the checking, it is called auditing. Auditing means checking the books of accounts and finding out whether the profit is properly calculated or not. And you know why government wants audit? Because government doesn't trust businessmen. Businessmen are liar. Even if they earn profits of 5 crores, they will show only 5-6 lakhs. Even if they are earning profits of 5 crores, they will show 5-6 lakhs. That's why government says you get your account checked by a chartered accountant. And we believe chartered accountant is an expert. He will find out whether you have shown the profit true or not. And that work is called audit. Okay. Now, who has to do audit? Like in my business, I don't have to do audit because right now my business is small. But once your business turnover exceeds 1 crore, audit becomes compulsory. I also maintain books of accounts of my coaching class. But my books of account I maintain, I find out the profit. No one is going to check because there is no requirement. Requirement of audit applies when? When in your business your turnover is above 1 crore. So tell me, what if in my business I get fees from students? For me turnover is what? Fees from students. If it is above 1 crore, that means my business is a big business. Then government will say, get your accounts audited. And if I say, yes, I am a chartered accountant, I will do it. Even if you are a chartered accountant, you cannot check your own books. Your books, you have to get it checked by some other chartered accountant. And that is called audit. And see, when I say tax audit means compulsory audit. And tax audit assessee means those assessees who have to compulsorily get their accounts audited. Means people having turnover of above 1 crore. The deduction is for them only. Because if a businessman has a turnover of below 1 crore, what staff he will keep? Government is not having that much expectation from a small businessman. Like see, in my business, my turnover is not crossing 1 crore. So whether I keep new employee, I don't keep new employee, government will not give me importance. And if I say, no, I have kept 5 employees. So what government says, you are keeping for your self-interest. Because you are growing right now, growing. You are not reached 1 crore. Yes, once you reach 1 crore, that means you are saturated. You achieved the growth. Now if you keep employee, thank you. Then government will feel thankful. But till the time I have not achieved a turnover of 1 crore, then I keeping the staff, it is my own personal interest I am keeping. And actually I am also struggling for good staff. See, when your business is small, you yourself need the staff. So you are not doing a great obligation by keeping the new employee. When can you say that you have done an obligation? When your business is well settled, you are above 1 crore. Then if you keep new employees, then government feels grateful. And deduction is for them only. For those business whose turnover is above 1, and they are called tax audit assessees. Tax audit assessee means those assessees who are having a business of more than 1 crore. Okay. So tell me, if someone's business is having a sales, turnover means sales only. Sales is only 40 lakhs. And if he has kept new employees, no deduction. Logic, government will say you yourself need. You are not obliging. Because your turnover is just 40 lakhs, you are growing. And in growing stage, we need employee for our self-interest. But once you have achieved 1 crore level, then if you keep the employee, you will get the deduction. But see, 1 crore is for a businessman. For a professional, it is 50 lakhs. Profession means a law firm, chartered accountant, company secretary, professors, doctors. So tell me, I am having a business of medical profession. I am a doctor. Then for me, the limit is not 1 crore, it is 50 lakhs. Means once my collection in the business from all patients, imagine I am a doctor, and once my collection from all the patient, if it is above 50 lakhs, then I am called a big man. And then if I keep new employee, I will get a deduction. In short, here you have to remember two amounts. 1 crore limit is for a normal businessman, and for professionals like doctors, lawyers, chartered accountants, for them the limit is 50 lakhs. Once you cross this limit, you will have to compulsorily get your accounts audited by a chartered accountant. And once you get your accounts audited, you are called tax audit assessee. Why it is called tax audit? Because the limit of 1 crore is given in income tax law. So as per income tax, you have to get audit. So tax audit. As per income tax law, when you cross 1 crore, you have to get audit. So that's why it is called tax audit. Because the audit is required by income tax law. Anyways, this I have to struggle so much because audit has not started in your batch. But once audit starts in your batch, it will be very normal for you that there are some people, for them audit is not required, and for some people audit is required. That's what I conveyed. And only those people who are required to get audit, only for them the deduction is available. Immediately we'll take one small question on this. See this. Try this. Question number 5. Question number 5. Read. See, this is little different type of sum. See, up till now the questions were on compute the total income. Means we are supposed to prepare the statement. Please notice here what is asked. Just calculate the deduction amount. Means you don't have to add all 5 heads of income and then minus and arrive at the final answer. Here they are asking the deduction amount only. So read from the beginning. Mr. A has commenced the business of manufacture of computers on 1st April 2023. Commenced the business means started the business. Means he has started the business now only. On which date? 1st April 23. He employed 350 new employees during the previous year 23-24. Tell me, this 350 are old employees or new? Old he will not have only. This is the first year of his business. When did he start the business? 1st April 23. So all the employees which he has appointed are all new only. Even they have written the word new employees. Now details of whom are as follows. Now read the details. If you check, the total of this column is 350 only. Check once. Right? Wait, I'll tell you. Did you check the total number of employees? Okay. Then see, there is one printing mistake in the date column. This date column, it is not 22, it is 23. In the date columns, it is by mistake written 1422, it is 1423. Business only started in 23-24. So what is the breakup of 350 employees? 75, 125, 50 and 100. And this is the date of joining. And then regular employee or casual employee. You know, I told you government wants a casual temporary employee or a permanent staff. Permanent. So see, here they have written. Read this sentence below. Read. Regular employees participate in recognized provident fund while casual employees do not. So this is a sign of what? Regular employee means they are the actual one who participate in provident fund. That means they have got a permanent job. And casual employees means they are casual. Today they are working with the company. Tomorrow they will be removed. And government doesn't want casual employee. Government wants full-time staff. But for full-time, what they have said, they should participate in provident fund. So do one thing, you can also do like this, the way I am doing. Regular, participate in provident fund. Casual, do not. So in the table, one thing is for sure, casual employees you will not take. So do one thing, I will just strike this off, casual employees. This is not a printing mistake. This is our brain. Did you realize what did I cancel? Casual employees data. Because they are not allowed only for deduction. Now see, all other group of employees are regular. Now check the salary. Tell me, what do you mean by total monthly emoluments? Emoluments means what you get from your job. It means salary only. Simple language, it is salary. Underline that and write. Underline emoluments and write there salary. And this is monthly salary. Monthly means per month and per employee. Tell me, what was the condition for salary? New employee salary should be how much?
25,000 or less.
Less than equal to 25,000 it should be. So here it is how much? This is less than equal to 25. So this is eligible. Then 26,000 is above 25,000. So not eligible. So we'll do one thing. This 26,000 salary, this group of employees will cancel. Because when the salary itself is crossing 25,000, no point in satisfying other condition. Because all our conditions should be satisfied, all. But here which condition is contravened? Salary of 25,000 or less. Here it is more. So condition is not satisfied, it is contravened. So I will cancel this also. See, if I cancel this, my job becomes simple. That this is out of sight, out of mind now. Now I have to think between, look, 7,500. Check, are these employees satisfying all condition? See, for 75 employees, salary wise, it is good, 24,000. Regular employee, very good. And employed on 1st April, means employed for the whole day, full 366 days, very good. So every angle they are qualifying. But see the last group of 100 employees, salary wise it's okay, 24,000. A regular employee means participating provident fund, that is also okay. But see the date of employment, this is important. When were they appointed? On 1st of September. So their job started in the month of September. So let us count. In September there are 30 days. October 31. November 30 days. December 31 days. Jan 31 days. Feb 29 days. March 31 days. So see how many days they were working. See this total. September, October, November, December, Jan, Feb, March. So what is the total of this? 213 days. Getting or not? So total is 213 days. So which condition is not satisfied here? What was the rule? Look here. They should be employed for 240 days or more. Yes, if the business was manufacturing footwear, leather products, apparel, then it is 150 days. But here what is written? The business is of manufacturing computers. See? So for computer manufacturer, this exception doesn't apply 150 days. So as per 240 days, This 100 employees disqualified. Disqualified. Why? Because they have not fulfilled the condition of 240 days or more. That's why disqualified. So even this got cancelled. See, everywhere reason was different, huh? At one place the reason was salary is 26,000. At one place the employees are casual. And at one place the number of days less than 240 days. But whatever may be the reason, they became disqualified. Okay, now read what is asked. Compute the deduction, if any, available to Mr. A if the profits and gains from the manufacture of computer for that year is 75 lakhs. You know this profits and gains is what? Income from business. You know this amount they have given ready-made. Read and check what was given. I will underline this. If the profits and gains for that year is 75 lakhs. So that means, look here, look. This amount is 75 lakhs. But actually we don't need this amount. Because the question is not on compute the income. Compute the deduction. So we just want to calculate this amount. Yes, if the whole statement was supposed to be prepared, then income from business amount is given ready-made, 75 lakhs. But I am not needing that amount, because what does the question say? Compute the deduction. So my answer will be only this much. See this minus figure. Okay. But then what is written later?
Turnover is 10.16 crores.
Turnover is 10.16 crores. Tell me, if a business has got turnover of 10.16 crores, so what is the sign of that? This is a sign of tax audit. Any business having turnover of more than 1 crore, audit becomes compulsory and it is called tax audit. That means, look here, look, Mr. A is a tax audit assessee. Is a tax audit assessee. Why? Because his turnover is more than 1 crore. Forget 1 crore, it is 10 crores. 10.16 crores. So that means he is eligible for deduction under 80 JJAA. Tell me, what if his turnover was only 40 lakhs? Then we should write a note. See, you have asked me a question on 80 JJAA, but I will not take. Because my assessee is not eligible. Why not eligible? Because his turnover is only 40 lakhs. So he is not a tax audit assessee. And not a tax audit assessee, he is not allowed 80 JJAA. Which section we are doing right now? 80 JJAA. Okay. But he is eligible. Okay. Do one thing, underline this and write. Therefore, wait. Write this. More than 1 CR. Therefore, see what I have written. Therefore, tax audit assessee. Tax audit assessee. And that is a condition, then only you get deduction, huh? Okay, see, there is something else also asked in the question. We will read that later. Don't see that. Don't see. How will you solve the sum? Look here. Look. Look at the solution. If you want, you can copy this later also. Look at the solution. Or you can do it right now also, whatever. See. What is the total number of employees? Where it was given at the start of the sum. And you know what I have done? From 350 employees I have removed which are not eligible. See, which employees were not eligible? One by one you tell me. 125 not eligible. What was the reason? Salary was more. So see, with reason you should write. Look here. Less employees whose salary exceeds And they were how many? 125. Okay, then 50 employees, why they were not allowed? Casual means they don't participate in RPF. So see what I have written. Less employees who do not participate in RPF, casual. See, you might be wondering why you are doing long cut, sir. Directly we can do calculation based on 75, but then we cannot give explanation. And in the exam, they expect us to give the detailed explanation with reason. Okay. So that's why I've done like this. Okay, then who else is to be removed? This is also not eligible. Why? Because the period is only 213 days, less than 240 days. So see how I've written. Employees employed for less than 240 days. So remove this, remove this, remove this. Automatically you will get 75 employees. Now, how to calculate deduction? What is the formula here?
30%.
30% of the salary. So what is the salary now? I want to know the salary of 75 employees.
24,000.
Where is it given? 75 employees salary is 24,000 and 24,000 is per month per employee. How do I know it is per month? See, monthly and per employee. So what you will do? This you will multiply by 12 because it is per month. Why 12 I am multiplying? Because see, like this you have to understand. Because the statement which we prepare here is a statement of one full year. And I want deduction under 80 JJA in the statement, and statement is of 1 year. So I will calculate salary of full 1 year. But see, be careful. You know why I am calculating full 1 year? Because they were appointed on the first day only. That is also important. What if the employee might have joined on 1st May? 1st May. Then that means they didn't work for 12 months. They worked for 11 months. Then only 11 months salary. See, here it is 12 months. Blindly also you would have taken 12 months. But don't take blindly. Check the date. When did this 75 employee join? 1st of April. Oh, that means full 12 months. You should check that. So 24,000 into 12 into 75 employees. So what is the salary coming to? And then 30% of that. This you understood what I did? Into 12 months and into 75 because the salary is per employee. And 30% is a fixed rule in 80 JJAA. So what is the answer? 64,80,000. This is the deduction under section 80 JJAA. Means in the exam you have to write computation of deduction under section 80 JJAA. Here I am not preparing a statement. What if they ask me to prepare a statement then? No, then 5 heads. Then as per 5 heads tell me salary is 0. House property 0. Income from business it was given. What was income from business? 75 lakhs was given. Then capital gain 0. Income from others is 0. So gross total income would be 75 lakhs. Then from 75 lakhs I will minus 64,80,000. Such a huge deduction for keeping new employees. Okay. But anyways, I will not prepare the statement of 5 heads because it is not asked in the question. Do what is asked. Don't do extra. Okay, now they have asked some more thing. What would be your answer if A commenced the business of manufacture of footwear on 1st April? Means instead of computer manufacturing, what if he was into footwear manufacturing? So what difference it makes? In case of manufacturing of footwear, leather products, apparel, the condition of 240 days becomes 150 days. So tell me where 240 days was a hurdle for me? In this last category employee, 240 days was my hurdle. But now I don't have to worry about 240 days. Now 150 days is also okay. And this 100 set of employees have finished 150 days. They have worked for 213 days. So it is above 150 days. So they will get qualified. Means see, this will become eligible now. But tell me, will it affect this 125 and 50 employees? They are still disqualified because their number of days was not a problem. At one place salary was the problem. At some place casual was the problem. But where days was the problem, that is sorted. Because now it is 150 days rule. So tell me, your answer will change how? You will get deduction for this 100 employees also. Try on your calculator. See, 75 employees salary is how much? 24,000 into 12 months. Because they had joined on 1st April. But what about 100 employees? When did 100 employees join? Please check the question. See what I am doing. My iPad will get spoiled. Please look at this. On 1st September they have joined. So they will start getting salary from September. So count September, October, November, December, Jan, Feb, March. 7 months. So they will get salary only for 7 months. And it is 30% of their actual salary. So see, both are per month, but this I multiply by 12 months and this I multiply by 7 months because the date of employment here is 1st September. And then this is a salary of 75 employees. This is a salary of 100 employees. Then 30% of that. So this is deduction under section 80 JJAA. In short, in this question, all points were covered. Actually, this is a question from Institute study material. All the questions which we did earlier, they were my created question. I created in such a way so that I can cover different section in the question. But this is as it is copied from ICAI study material. I found this question is a good question because in one question they have covered everything. See, did you check all the knowledge was used? You required this knowledge, you required this knowledge, you required this knowledge, okay? Yes, this point was not tested. Okay, but they didn't say how the salary was paid. When the problem is silent, we make positive assumption that the payment of salary was done by account, paycheck, draft, TCS. What is ECS? Electronic clearing system. That was our assumption, okay? But the main points knowledge was tested. Even that 150 days knowledge was tested. So this was a comprehensive sum on 80 JJAA. So now, if you want, you can write, okay, you can finish it right now. Finish it right now. You have some time. Because within this less time, it's not proper to start a new section. Actually, I was planning to give you this as homework only. Solve from this. But do it right now only. And those who are watching the video lectures, take the image of this. You can take it from your mobile and then take the image of this. Because I am stopping the recording right now. Because there is no explanation left. But wait, everyone wait. There is a homework to be given. Mark that homework because thereafter I'll stop the recording and video lecture students can just take the image of this one and this one. This is the answer to question 5. Okay. Then just take the homework so that I can stop the video recording. So your homework is question number 1 we are done, 2 we did, 3 is done. Question 4 is homework. 4 is homework, then now I can give almost all. 4, then 8. 4, 8. Four, 8, 10. 12, 13. 4, 8, 10, 12, 13. 4, 8, 10, 12, 13. No, wait. 13 I cannot give for homework. Okay, sorry. 12 and 13 I can't give. Lucky you are. 12 and 13 not possible because that has some section which is yet to be taught. So then 4, 8, 10. 4, 8, 10. Let me check 9. Okay, fine. 3 questions are enough. 4, 8 and 10. Question 4, 8 and 10. 3 questions are for homework. Okay. Please do the homework and come. And those who are sitting in the class right now, just finish this sum.